Hi, everyone, and welcome to Monthly Market Report. It's Coram here with hedge fund manager Jim Roppel, founder of the Roppel Report. And we've got your September monthly action breakdown. Jim, great to see you as always.
Great to see you.
Okay, well, let's get right to it. I mean, there was a fun weekend in Vegas, the IBD Founders Club weekend. So you're coming in hot after that. You've also got a cool T-shirt going, which I feel like we also have to address briefly before we get started. You aren't often in a tee. You normally have a collar, so it must say something really great on it for you to be so
It's a
cash.
Livermore quote. It's a Livermore quote, and I think it's one of the most important quotes in the whole book. And I think it's particularly opportune at this minute because I think we're staring the biggest opportunity ever in my life. And there's people buying stocks like Palantir and some of these names that are probably literally model books would say are going to go up 500% to, Cisco went up 64,000%. And people are selling them up 15 and 20. There's life changers staring us straight in the face. And they're like, oh, take my 20% gain on. I mean, are you in this to get rich or make nickels and dimes? Okay. We are staring the biggest opportunity, or the scenario, the table is set for this. And so I just got to pay attention to Livermore, the kingpin, the guy who was kind of inspired so many and made a fortune, ultimately lost it because of psychology. But when you have an opportunity like this, you need to sit.
Lots of lessons there, lots to unpack, because on the one hand, you now have some of these groups that are really catching fire and going straight up, like some of the China stuff, which we will get to. And then on the other hand, you have this roller coaster ride that we went on not only in September, but also August. The last 2 months have been a roller coaster ride. So I think, thinking about making money in the sitting in the context of that, but also, there's perhaps some shiny objects out there right now, Jim. So we'll get to the charts, we'll get to the action, but I think one thing to remember with the sitting part is buying right and having proper risk management makes both of those things, having those things makes the sitting easier, wouldn't you say?
I think you said risk management, and I tend to take really big positions. I mean, generally 18, 20% of my whole fund, and often on margin, which is nearly impossible for someone to hold through a 15, 20, 30% correction in the stock. So again, risk management, position size, it's much better to take it depends on who you are, but take a slightly smaller position if you're just going to hold for the long term, or trade around a big core, which is what I do, or hedge. So I don't want to misconstrue, the possibilities are there, but you have to be able to either endure the volatility and the pullbacks and have the right position size. That'll help you get through the volatility.
Yeah. And again, and this is something we've talked about before, you do it from a position of strength. You're not sitting on something that's going down a bunch from your purchase price. It's something that is one of those big winners that you have a cushion on, that you've been trading around or hedging, and you're profitable. It's a profitable sitting, right?
Cushion is possibly the most underrated, most valuable part of speculation. Otherwise, you're on a razor's edge. If you buy a stock at a pivot point, you are waiting to stop out. That you're just watching it like a hawk until you're up 10, 20%. Once you're up there, it can move in its natural flow and ebb, and you can chill. But if you dump it at 20%, now you got to redeploy that cash and you're right back on the razor's edge. Cushion is possibly the most underrated valued thing in speculation.
Well said, Jim. Okay, with all that in mind, let's now talk about the action for the month. So the NASDAQ composite, I'm going to go over to the monthly charts here. For the month of September, we got an upside reversal here, and the gain for the month, 2.7%. On the NASDAQ, let's also take a look at the S&P 500, up 2% on the month, new high territory there. Let's also take a look at the Dow for the month, up 1.9%. The Russell 2000 basically flat on the month, slightly higher, but we've been talking about that 2000 level or the 200 area on the IWM ETF. Definitely a battleground for a lot of the year, but the last 3 months, we found support above that. So it's not been off to the races, but it looks like we're building a slightly higher platform here. Jim, your thoughts on how the month went down?
We had an echo from the August pullback. We had an echo pullback, which was not as deep. And, the month was up 2%. Sounds like nothing, but it's kind of a lot. It was a tough month for a lot of people because they had to really sit. And if you got shaken out, then you're racing to get back in. But this is pure bull market. I mean, going out at all-time new highs is, hard. How do you refute that? I mean, can we look at the VIX real quick? Is that possible?
Sure. Yeah. 0 VIX in market surge.
So the VIX obviously went nuclear in August, and in the echo pullback or echo correction, it heated up a little, and there was some concern for sure in there, but it never got rolling. So that's really a kind of an indicator where you should try and hold. And then can you look at IAI, please?
IAI, you bet.
I mean, it's kind of hard to get really bearish when the broker dealer index is going out at all-time record highs. Breadth is improving.
RSP, one way to look at that.
Yep, totally. How about QQEW?
Let's check it out.
It's not as good. So clearly the S&P is outperforming. Mag 7 is exhaling a little bit, so but on the negative side of the world, the war front, Ukraine, Middle East, the oil market, if you USO, as much as the media is trumpeting terror and war and all these horrible things and try to scare you to sell ads, the oil market says no. The oil market says the talking heads who are trying to scare you are wrong. Be a free thinker, follow the markets, not these guys who are trying to sell ads. Can we look at a sentiment indicator like IAI or any? I can just tell you, one of the most beautiful things right now is even though the market's rallied to all-time highs on most indexes, the bear bull is nowhere near. The bulls are way off the high. And that is, short term, the markets are high and they may need to digest or go sideways. We had a little bit of stalling last week, but sentiment says there's a lot of room for upside before we have to get, worried about an intermediate term correction. And when I say, hey, look, this is the biggest opportunity ever, you have to remember the NASDAQ pulls back 4.1 times a year to a level that necessitates a follow-through day. Okay. And you also have to remember, we just had a correction that was 16 point something percent. That was 4% off bear market territory. So we just had a really big pullback, echo pullback. But
I've never heard that, but that totally makes sense. It was a little echo pullback. I like that.
We'll see. I mean, it did something. I don't know. And then there's a lot of people talking about the election. And my take on, we're talking about general market.
Yep.
Election is an absolute sideshow to number one and number two, which we're going to discuss in a minute. I think it's 10% of the equation. That's the media, again, scaring people's personal fears and hopes and wishes for their candidate. The reality is, I think the biggest thing is going to be the relief after post-election. We may get some, October's rough, September's rough historically, but here's another thing. We had an expectation breaker. And the market went up. That is, we're in a bull market here, not just any bull market. I mean, think about how strong this year is. And we're going out at all-time highs right into Q4. We might need to digest, but guess what? I'm bullish.
Okay. Well, we're in a seemingly strong position here, Jim. And I think if we're talking about the big key moments of the month that are setting the stage for the next couple months or foreseeable future, I mean, you have to talk about the Fed rate cut. So tell me what you think that means for the market here, getting that a half point rate cut with more cuts seemingly coming seems like a pretty big tailwind.
It's the biggest tailwind. There is no bigger tailwind, Fed liquidity, but there's more. There was a 62% probability based on Fed funds futures that we were going to get a 50 basis point cut, which means only 12.5% of the people thought we were going to have it. So that wasn't discounted. That is extra fuel. Can we look at AXP? Let's talk about cutting rates into job growth is still growing. We had 142,000 new jobs created last reporting period. So we're not in a recession, and we're subtly decelerating growth. This is not a declining economy. And when you cut rates into that is just rocket fuel. There's no better scenario. Well, there is, and we'll discuss that later. But let's look at the consumer. Let's look at AXP, American Express. Let's see if they're proxy. Oh, is that an all-time high?
Let's see. Let's check out the weekly chart and the monthly chart. Yep.
So consumer looks healthy. Let's look at MasterCard, because maybe just the rich guys are making money or spending. All right.
Nice.
Costco. This is definitely the middle America. Costco, all-time highs. Walmart.
Definitely all-time highs.
And how about Restoration Hardware? It's in a little digestion after can we go to the
big move for the month?
Yeah. Yes. Look at that. I mean, I don't love straight up and straight down. There's a lot of jagged in there. And I'm not saying this is a beautiful pattern.
More of just a sentiment, consumer health indicator.
Yeah. So you start cutting rates into an economy that is solid at the very least. That is historically extremely bullish. It doesn't get more bullish than that. I can't come up with a better scenario.
Well, Jim, with that being said, what are the other factors that we need to be aware of right now? You said the Fed is one big thing. What else do we need to be thinking about?
So everybody is really ramped up about the Fed, but I think the bigger show is China. The PBOC, People's Bank of China, has been absolutely firing the bazooka, and the market has exploded. FXI is up 19% in like 4 days. That is the second largest market in the world. I think it's like $9 trillion. The US is 60 trillion. Okay, so clearly, but the global liquidity situation is changing massively. And in last Sunday's Roppel Report, I have to plug this. I put a picture of John Templeton saying bear markets are born on massive pessimism. And I had no clue the Fed was going to let rip on Monday morning, but they did. There's been an unbelievable short covering, panic rally. And the sentiment, when you go out on Twitter and you see what people are saying, like, this is never going to do it. They say, one guy says, a bazooka, you're going to need 100 bazookas to rectify what's going on in China. Well, forget their comments. Look at the market. Just look at that. I mean, you get a $6-9 trillion market to run 19%. That's the biggest move it's had in a decade, or let's say years and years and years. I'm not sure how many exactly.
Especially in that short of a clip.
Yes. And, this is the game changer. This is unexpected. Let's look at a few others. FUTU. This is a brokerage firm.
Mm-hmm.
Billy.
Starting off the week strong. Billy is another one.
Now, again, did you see the exhaustion we had on Billy today?
Right.
People were expecting that 4 days ago, and it just kept going. I mean, the significant. Now, okay, so then Baba.
Mm-hmm. And that's my question, Jim, is, okay, so what do we do? It's one thing if you buy Alibaba when it's breaking out of the cup with handle here. But, a lot of people, I think at that point, didn't really believe this move. Or like you said, once it has one exhaustion gap, okay, this thing's got to cool off, and it went a lot higher. So what do we do here with these?
Okay. I had special commentary last week about what you should buy, but now we could get a very, very ideally tight digestion, kind of like Oracle right now. If you look at Oracle is a good example of what I would hope for. Mm-hmm. So they have a giant run for what is it, 60 or how many billion-dollar market, for an enormous market cap to go dead tight like that. If
470 billion.
Yeah. Okay, one of the largest companies in the world holding dead tight at the highs. If we could get these Chinese stocks to do the same thing,
Right.
if you missed it, I
That's what
don't
you
know.
want to see.
Yeah, if it comes out of a 2 or 3 weeks tight, I think the opportunity, the upside is so big. I would take the I normally add over 2 and 3 weeks tight, but if you look at the highs, look at the all-time high on BABA, TCOM, Baidu. I mean, go to the please. There you go. Where could these things go? These stocks are absolutely crushed. I mean, think about the media or the banter. Depopulation, no childbirth, demographics are terrible. It's a communist government. I mean, I don't like valuation. I don't like to talk about it because it's not generally a component of Can Slim. But when you have companies that are absolutely compressed to crazy low valuations, and then you get a bazooka of liquidity coming in, that's an opportunity to me where I'm willing to take some added risk in moderation for yourself. You have to measure what you are open to, because there will definitely be pullbacks. But if it goes dead tight like Oracle,
yeah, worth a shot with sell rules in mind.
100%.
Sounds like. Yeah. So then when you're saying, referencing that Templeton quote, born out of pessimism. So that's why you're referencing, all of the things going wrong in China right now that required this sort of bazooka of liquidity.
And markets look forward. You don't drive your car through the rearview mirror. Okay. You go through the windshield. The market's looking 6, 9 months, even a year or two down the road. Now, this is no lock. If it could fail, and I will pull the ripcord in 3 seconds. But the big liquidity names over there are absolutely in gear, and they're looking way down the road. So, you look at these companies and how much they're expected to earn and where they are now, like you can come up with some very, very big targets.
All right. Well, we'll have to see what the digestion looks like over the next couple of weeks, and maybe we'll have to circle back on them in the October monthly market report. So
we'll do it.
Looking forward to that. Okay. Next up on the list, we've got to get an update on AI, because that was another big story that unfolded this month. Not quite to the extent that the China stocks really got up and out of there, but you have this Microsoft deal with Constellation Energy. We know that these AI data centers are going to require a lot of energy, a lot of cooling, et cetera. So you have this infrastructure side of AI, and this deal really lit up the group. And we are seeing that digestion starting to unfold here, Jim, with stocks like CEG, VRT, VST, some of those other ones as well. NRG. What do you think about this area of the market?
Here's another. First of all, when I was a young stockbroker, I was selling retired people who couldn't afford to lose money, utilities for the dividend. This is, you don't see utilities don't gap up 20%. I mean, This is acting like a growth stock. They earned earnings. They lost 53 cents a couple of years ago. They're expected to earn, is it 806?
805 this year, and then 891 next year.
Now the stock's telling me they're going to earn a lot more than that. This isn't. Look, it's hard to. Everybody wants the sexy. What's the possibilities for AI? We're so early. They're trying to figure out how to generate enough power to implement. This is a infrastructure base level beginning, and Elon Musk came out with a comment. He said, eventually 85 to 90% of all energy production will go to AI data centers. Like this is nothing. This is the fuel. We're just getting the fuel ready to make this whole thing lift. If AI was a baseball game, the first batter is probably walking out to the on-deck circle. Maybe he's moving from the on-deck circle to the home plate to take his first pitch. I mean, when we're talking about the base level here, the developers and the people who are really integral to the process, they don't even understand the possibilities for what AI can do. This is going to be a very long boom. It took 30 years to implement the internet, or to fully realize, to monetize, to build it out. We're in like the first year or two. Jensen Huang says CapEx in the next 3 years should be $1 trillion, just for 3 seconds. Now, IDC says they're expecting global GDP to expand because of AI by 19.9 trillion dollars by 2030. Just for 3 seconds. Gets better. McKinsey says $25.5 trillion of market cap expansion, or of global GDP. Now, hold on. The global GDP this year is only expected to be 105 trillion, and it's normally growing about 1 or 2% a year. We're talking about putting in like 18 to 20% possible expansion in GDP in the next 6 years. This is, when I say the biggest opportunity of our lives, it may be staring us right in the face. So
great context there. So Jim, how do you handle something like CEG? Is this the leader on the infrastructure side in your view, or how would you identify this one, and what sort of buy point? How do we get on board? I know, the day that Microsoft deal was announced and you had this gap up out of the base, it seems like this was another one of those situations. This base kind of reminds me of in a little bit is that SMCI base. Remember that we all thought was so ugly, and then it worked?
I was on the air with you on IBD Live and I missed it, but my brilliant associate Eve loaded up on SMCI. This is another case of, breakaway gaps early. And this wasn't the most beautiful base, but the power and the volume kind of washed away the sins of the failing. NRG had a way better looking base. And that was my pick that I put in the Roppel Report. And it was the dog of the bunch. But it had a much better.
It still looks good. I am saying this full disclosure with me owning it, but yeah, it's definitely, it's not the leader in terms of the price performance, Jim. That's for sure.
And that's really the market giving us a clue. The energy is most likely going to work, but the real monster is GEV and CEG. Yeah. And I think
as well
in the early stages of this AI boom, yeah, I think energy plays are where you want to be obviously part of your money. It's the base level build out of this whole revolution. Mm-hmm. So where would you buy it? The opportunity seems so big to me. I'm willing to take a bigger risk on a 2 or 3 weeks tight. Again, I would never historically start it. I don't like absolute terms. I generally don't do that, but a couple times a year, when I see something that the opportunity might be so big, it's worth the added higher probability of getting stopped out, which is much higher.
Yeah. Well said. So hopefully we can see this one go tight for a couple of weeks, GEV, and then CEG or G. Yeah, that's right. We're getting this short digestion. It's starting to develop here.
Yep. Coming out of there, I at the bare minimum, I would add 10, 15%. I hope you're already long.
Not this one. I should have been in it. Or sounds like you're in it.
I know somebody.
No, Eve. Oh, you know somebody. Yeah. Well, we're keeping our eyes peeled for a potential add point. Okay. So, in terms of, those were some of the key moments from the month. With all of that being said, how should traders be positioned right now? Obviously, like if we do have this bull case, we have the tailwind from the Fed rate cuts. We have China getting into gear. We have the consumer looking strong. We have the market as of now, not concerned about war abroad or the election. So clearly to me, that signals that, hey, we need to be fully invested here, but you have to be in the right names. So
we're going to take a look at a bunch of names at the end, but look, I started in 1985. I've watched the cellular boom. I watched the internet boom. I watched the biotech boom. I watched all of them. And I've never seen something fundamentally this big, with China turning, with the PBOC gunning money supply, with the Fed cutting. I don't think I've seen a cocktail of ingredients that fundamentally paint a picture like this ever. In my opinion, for everyone's risk tolerance, this is a max long moment. And there may be chop or sideways through the election. I mean, that's highly possible, but that doesn't mean a thing to me. Okay. I am looking, this is going to be a long boom. This is a max long moment for your personal risk. And I think the wealth creation, I think Mag 7 market cap is like 14 or 15 trillion dollars. It's just Mag 7. It doesn't include Brocade and all these other side. If the wealth creation is only as big as the internet, what are the possibilities for everybody listening? If you're a Cancelam investor, you're uniquely qualified to capture this. If you're not max long now, you should never be max long. This isn't your max long moment, you're not understanding the variables here. So that's my opinion. Max long for your risk tolerance, and be prepared for maybe nothing for this month, but the balance of the year, and I mean next year, what's possible? And then we'll have bear markets. Look, asteroids are flying around the universe. Okay. There's dictators and scumbags and bad hedge fund managers who are levered up too high. They're going to come unglued, and those asteroids are going to come smash into our perfect world.
And then you'll change. You'll pivot.
Gotta be prepared. That's it's not only not impossible, it's likely. If we were going to boom for 20 years, we're going to have we're going to have 3-4 bear markets at least. And we're going to have some asteroids. We're going to have a couple of tie-back currency crises, and long-term capitals are going to come unglued. So max long is prudently.
Right. Yeah. So the stars are aligning for that at the moment. So before we get to more, you just reminded me, okay, so if you are max long, I think to also counterbalance that, and we're saying, okay, if you need to pivot, what would you say is your top sell rule, Jim? Let's start with a stock that you just started a position in.
Okay, so 357, you're down. I sell
percent.
You buy 1,000 shares. You sell 3,300, 1/3 of your position down 3%, 1/3 down 5%, and 1/3 down 7%. That's just, it's a zero defect policy. If you don't, you can't stay in the game if you're taking too big of losses. So that's number one. Number two would be ideally a climax run. And then number three, I call the 50-day MA, the guardrail, and not 1% below, but more than 4 or 5% below on a Friday close, or the volume is exploding down through the 50. Now, what are you going to do? If you're in a tax deferred account or tax free, I would trim the shares outright. I don't want to pay the tax. I'm almost, my partners are mostly taxable, so I hedge extensively, and if the stock comes down below my strike on the hedge, I'll roll them down, because I don't really ever know. Like I didn't know China was going to explode higher. But I was ready for it, and I don't know if we're going to have a bear. It's not impossible we have a bear market. Like, what if I'm completely wrong and we do have a recession, or God forbid, a deep recession? I'm not just going to stand there and get run over.
Right, because we do have that wall of worry, right, with some macro elements, especially the election and the overseas war stuff. The market doesn't care right now, but could it at some point? We don't know. So yeah, we'll be ready for anything. Those asteroids, we'll be ready for it, but we're just working off of the information that we have right now. So I like the cocktail analogy there, Jim. So while we're talking about some international stuff, let's talk about two other international markets, India and Argentina. What are you seeing there?
I love them both. I mean, I absolutely love them. There was a IPO in Argentina. I'm sorry, in India, where, let me get my notes. Give me 3 seconds. An Indian real estate company went public. They were trying to raise 781 million. It was 40 billion bid, oversubscribed. It was 67% oversubscribed publicly and 222% oversubscribed institutionally. It went up 130% day one. If you look at SMID, you've got it already up.
I have one. This is INDA.
Okay.
But I can also pull up SMID.
Wait, I got INDY is what I wanted. I'm sorry.
INDY?
Yeah.
Okay.
I mean, look at this. The demographics in this country are absolutely, they're probably the best in the world. And I have this warm spot in my heart for China and Baidu, because it was my biggest trade ever. And it keeps me aware of, even though they're communists and they have 2 million people in concentration camps and they're bad guys in general, their market is full of companies that they're probably the second best place in the world for tech. Okay. And even though they're the Mag 7 are all domiciled in the US, they're still going to be, if we're going to have a long boom, they're probably going to be a few big winners. And you can't just say no. Okay. Kyle Bass is out there going, it's doomed. You'd be a crazy, no institution should have any Chinese exposure. Kyle Bass doesn't make a ton of money, but David Tepper does. And he is very long China. So I'm going to go with the guy I love Kyle Bass. I love geopolitics. And if you invest on geopolitics, you basically would be net short your whole life and wrong.
Yeah.
The world just seems to find a way. The golden goose is out there innovating and gentrifying, and that is reflected in markets. But I really think India is a place for the next 20 years. And on the same level as that, I love Argentina. Did you mention it?
Not yet, but I do. Just one that comes to mind, because you mentioned the IPO. I couldn't pull up the ticker. Have you seen it on Market Surge, the IPO, the Indian IPO you talked about?
It's locally listed. It's not an ADR yet.
Okay. Got it. Okay. So one that does come to mind, it's been volatile lately, but if you take that step back, MMYT, this is out of India. It's had a phenomenal move over the last year plus.
I love this stock. I own it. And this is a sign of gentrification. When the lower middle class and the poor gentrify, one of the first things they do is travel. And, all you need to do is look at the trend and you say, the estimates are low. As a matter of fact, they're even down. And the stock says the analysts are wrong. And it did have a bad break. Was it Friday? Now it's holding right around the 50. It's not impossible. We're going to have a bigger digestion than normal.
Right.
But, I'm long and I'll deal with the guardrail as I have to, but it's a signal that the class of people, the caste system is elevating in general there. So I'm very bullish.
Okay. We'll keep an eye on India. Argentina is another area, ARGT. This is another one, you take that step back. I'm seeing left to right, lower to higher.
So you all should Google Milei, who is their president, who is basically disbanded most of the government agencies. He is Ronald Reagan. His image of him with a chainsaw where he's just slashing government. He's ended subsidies. He's ended price controls. And their market is just rocking. If you look at what else do we want to look at there? Look at GGAL. They're one of the largest banks in Argentina.
Mm-hmm.
Now it's pulled back a little bit, but that's a cup and handle. His reforms, the market says, are starting to work. Now he's fighting massive opposition of socialism. Okay, but when we talk about China improving, it's the second largest economy in the world. What are the possibilities here? If this massive drag on global economy could somehow stop going down or possibly flourish, get a little golden goose going over there with rate cuts, with AI, what if the dictators all through South America and all these really bad people who are repressing people are forced to acknowledge what Milei has done and their own people demand the change? And all of a sudden we get this Ronald Reagan boom globally. I know this that would take a lot of time, but Milei, if he succeeds, dictators are on notice. And I am super optimistic about this. And I'm talking about for the poor. Free markets gentrify, capitalism gentrifies, dictators repress and steal from their people. All right, politics over. I love this index, and I'm very bullish on Argentina.
Yeah. So there's GGAL. We've also got YPF.
Okay,
that's
so
another
oil.
group. Still working on a cup with handle.
But oil's been obliterated. And what is this? Why is this oil stock one of the only one that is near all-time highs? It has sold off a little bit, but there's a reason. Okay, the market is talking. All these people, news anchors, and I really dislike the media, except for you, Allie. You're the best.
Oh, thanks.
You tell the truth. You say, it's not my opinion. I'm telling you what the market says. Okay.
Yeah.
The market, forget me, forget you. We're literally doing what everyone else says. We're reporting what the market says. Be a free thinker. We're going to talk about free thinkers and Eli Lilly in a little bit, but
yeah, that'll be a good one to circle back on. Do you want to go there now since you brought it up?
Sure, let's do it.
Okay, let's go. Eli Lilly.
Okay. The investment world flipped out because it broke the 50-day yesterday. And I did hedge off a bit of my position, but it's only, 9% off the all-time high.
Mm-hmm.
A stock not only has to break the 50, it's got to be more meaningfully off the high because the stock's been digesting. The MAs have caught way up with the stock. Now, you have a lot of, there's a very famous person out there saying you got to sell it short. And I'm looking at this and I'm like, I'm going to be a free thinker here. Okay. I'm not going to listen to anybody. I'm going to listen to what I think and what I see. I was in Vegas last weekend with your company's big founders club. And I walked around the casino and I said, let me see here. How many people in this place could use Ozempic? Do I think it's anywhere remotely close to maxing its total addressable market? So it breaks the 50, people flip, and now it gaps down this morning and then closes up, and it's right under the 50-day. If you're not a free thinker, you might have flipped out and blown the stock out. And this could be one of the biggest, this is a game changer for people who are, their heart and their lungs are overtaxed and they're going to die young. What would you pay to write that? You're going to pass away early, and this drug's going to change it, and you don't have to work out. It's a magic elixir. So is this thing done? Is it finished? Not by a long stretch. And could it have a pullback of 20, 30%? Absolutely. And that's why I did a little hedging. But no one's going to go, wow, how did Lilly go to 1,400 in the next 18 months? You're going to throw their hands up and say, I couldn't believe that happened. They've got a wonder drug on their hands.
Yeah. No. I was just going to say, I've been trading around this one. So I'm not currently in it, but I do have a profit on it for the year. So I've just been kind of actively trading around it. But I want to get a toe hold. I'm following my sell rules. So I want to get a toe hold so that way I can add to my gains in this one for the year. So
you want to make a killing? You have to. Stocks don't double or triple in very rarely do they double or triple in 3 months.
Yeah.
It takes time. If you understand the history of true market leaders, you need to, my definition of a true market leader is sitting for 4 to 6 to 8 beat and raise quarters. Okay. Straight off. You can't go through 4 to 6 beat and raise quarters unless you're holding it for a year to 2.
Yeah. Yeah, that's true. I think the thing that made this one tricky was the action from, when was that? Yeah, July and August were really tough. I mean, it was such a character change and a bad break for this.
Was a bad break, and it broke the 50.
Yeah.
But if you're, bull market.
But you hedged.
Absolutely, I hedged.
You hedged. So I think that's what makes the difference. I think just trying to hold outright, even if you have cushion, that for many active position traders, action like that can be tough.
Eve went through my biggest winner ever. My hedge fund made 30 million in Baidu. And I didn't even know it. Unbeknownst to me, Eve diagnosed my trade, and she found out that I traded around it 30 times over 18 months. So
2009, right?
I think it was
2010. Wait, what?
It was 20 years ago. It was a very long time ago.
It was longer than that.
Look at the monthly. Yeah. Okay. It has the IPO. It completely captivated my world. And I may or may not have, I'm sure I tried to make money in it in that first leg up, but then we had a bear market, and coming out of there, Bill has a rule. 5 weeks up in a row, you have to add. And I recognized that there was 1.3 billion people in China. There was like a 100 or 200 max online, 30,000 a day were coming online. And not only that, the government got in a fight with Google, And Google's founding values are do no harm. So when the Chinese government said censor or we're going to remove you, Google said no. And what did the government do? They rerouted every query from Google to Baidu. So I'm like, let me get this straight here. The total addressable market is 1.3 billion. There's almost nobody online yet, and they're all coming online at 30,000 a day. So I went wild and I loaded up. I backed up the truck and I bought.
When was it? Was it this first base or it was before that?
I started right at the very lows coming out of the follow-through day.
Okay. Yeah.
And
March of 09.
I bought 75,000 shares. It split 10 for 1. So I had 750,000 shares at the top. And it just was the best stock of my life. And this is why I'm not going to give up on China. All right. Just because they're communist doesn't mean that they can't have some winners. And they have a lot of very high growth companies. So we are way far afield. Where are we at right now?
We are talking about how to hold a big winner. And we talked about Eli Lilly, the tough action there. So it seems like the deepest base here, Jim, in this move was the last one, the only one that came down to the 40-week, and the depth was only 27%. So it sounds like, you did trade around it 30 times. Wow. But yeah. So go ahead.
I have to say this because it looks so easy when you're looking at the chart. But early on, around the 09 at around $40, there was an earnings call and management comes out and says, well, up to this point, we've used this platform that has made us a fortune. And it's really good, but we're going to stop using it as of right now. And we're going to implement this thing called Phoenix Nest, and the stock gap's down like 20%. And I had the full position on. So it was the biggest single loss. In other words, I was forced to trim about 20, maybe 25% of my position that day, but it was so gut wrenching. I'll never, even though it was 20 years, was it 20 years ago, 23 years ago? The pain 14. That I remember, I was long so much that I was one of the biggest institutional holders of it. And I was like, I'm at risk here. Okay. Like it was could have been existential to me. So I had to take action, and then it righted itself about 4 or 5 days or whatever. And I bought it all back. But you have to be ready for those asteroids. I mean, how was I supposed to know management was going to change think about when Netflix goes, oh, we're going to go online. We're not going to mail them anymore. We're going to go, and the stock imploded. You never know when management's going to pivot or these asteroids are going to come in. You have to be ready for the possibilities.
Well said, Jim. Well said. So we'll have to think about that for other leading stocks like, the Eli Lilly's out there. Yeah. This last, correction, high to low. I don't know what that, off the top of my head, I don't know what that was in percentage terms, but that one, it just looked a little sharp, but it has recovered. And I think taking that step back, this is still definitely one to watch. So I'm keeping an eye on it, keeping a close watch. Let's talk about some other stocks on your list. What else should people be keeping their eye on right now?
All right. There's so many names that are acting well. It's hard to, you need to narrow them down. You need to be selective. There's a lot of a stock breaking out of a base is not an automatic buy. Right. You've got to refine it down to the very, very best. So we're going to go through some that are maybe extended, maybe working, and maybe going to be monsters. And we have to start with Tesla. It's not, for me, it's not a buy here. But if you look at the weekly, I think you have a 272 pivot that's in the making, which would bring it out of this massive digestion. Stocks very, very frequently go dormant for years when they have thunderous runs like they have. But this is a partially energy company. And Robotaxi Day is coming out on 10/10. And stocks look forward. The earnings are terrible. But if the market starts talking to us and giving us the signal that they're looking forward and we come out of there, this is an AI. It's, they have one of the largest databases of data in the world. Energy company, autonomous driving. What happens to another company, Uber, if we don't have to pay a driver? What do their margins do? You don't have to pay the driver. You don't have to pay the insurance. The largest cost for them are those two things. What could their margins do? Where could this go? And again, it's in a double bottom trying to come out. And the same thing can be said for Dash, which looks much better than Uber, much, much better. Delivery of food is an expectation. It is not a luxury. I grew up, I had to go with my bicycle and get the pizza and carry it home like this. Kids today, they're like, bring it to me. I'm not going out. What are you, crazy?
The convenience economy.
Totally. That's it. It's
even with Lily, make me lose weight. I don't want to work out. Bring my food to me so I don't have to cook it. So I can, but not so that I can just be lazy. I'm sure there's people doing that too, but it's like, we have busy lives, right? So I want to spend my time better. I don't want to, create a bulleted list of things. I want AI to do it for me so I can spend my time doing things that are of higher value.
And the golden goose has gentrified America so well that we expect more, like a much higher level. Expectations for standards of living are extremely high because of the unique success we've had in America. So we look, okay, let's stay on the food. Let's look at Kava.
Sure. And DoorDash, I own it. It is extended here. Kava, I own this one as well, Jim. And I know you've been in it a lot longer than me, and I have a great gain in it. So I'm sure you have a really impressive gain, and hat tip to you. This one for a while you've been, pounding the table on as a true leader.
If you go to their stores, I've been to one in Dallas, I've been to one in Chicago. The lines are literally out the door, and the food tastes great. I really like it, but I see a lot of other people agreeing. When I'm in line, there's often 40 people in line. I'm, introverted and quiescent. I don't talk much, but
it's like the biggest.
I interviewing people in the lines.
You an introvert. Okay.
That's me.
No.
Where do you like to go out to eat? And they say, well, we love Kava the most. I go, well, where did you used to go? They're like, or where else do you go? They go, Chipotle. I go, how often do you go there? They're like, well, I used to go once a week or once every 2 weeks, but now I'm going less. And I only have to hear that like 4 or 5 times in a line of 40 people to go. And I love the food. I see the lines. The market, the market is discounting this. They have 350 locations. They're expected to go to 1,000. The management is impeccable. The chairman of the board founded All Bon Pan. He was CEO of Panera. They have a huge position in the stock. They did liquidate some. They had some insider selling, caused a little disruption in the market. But if they go from 350 stores to 1,000 in the next 6 years, that's, I think, 15% CAGR for a restaurant chain. Is it going to be Chipotle? Probably not. The total addressable market's not as big for Mexican food as it is for this.
I don't know. It's Mediterranean's getting pretty mainstream.
Well, look, Chipotle went up. I don't know what it went up, but would you be okay if this went up half as much as Chipotle in the next 3-4 years? Would you somehow get by? I mean,
I think I'd be okay with it.
I said CAGR. AI spending is expected to grow by 70% in the next 4 years. I don't think I've ever seen an industry, even a small industry, grow like that, let alone something in the trillions. That I'm not kidding around when I say the biggest opportunity ever. So anyway, we're at Kava. Okay, look at COHR.
Yeah. I need a Kava in my area. They need to put one by me. COHR.
Yeah. Just one of the smartest guys. We all know him, Webby. Got to talk to him, and he's like, yeah, I think there could be, he said he thought it could be an ascending base in Kava.
Now, let's go back to that real quick. Yeah.
I'm not good at diagnosing these. Yeah.
If this is the second one.
Yes.
The second pullback of 3.
Webby's like the professor of technical analysis and doing studies. And I cannot disagree with the man. He's studied this more than me. But now let's go back to coherent. Sorry.
Yes. We're trying to be coherent here.
That's hard for me. Allie, you're my guardrail. Okay. You keep me on the line on the road like Arusha.
Trying.
So
go ahead. So extended too, but the story here, real quick, tell us.
but while most tech is digesting, this one's out. It's leading. It's telling you a story like PI Impinge, which has, I believe, Impinge has 51% management exposure. Am I right on that?
Yes.
Okay. Let's go into more. Let's plow straight into AI. We can look at Oracle really quick.
Yep. We looked at this on our Stock Market Today video, but yeah.
It's nearly impossible.
Great action here.
It's for a mega cap like this to go dead tight like this it's so rare. It's screaming power. If you look at Meta, it's out. Again, another mega trillion-dollar market cap.
Yep, this one finally got to new highs.
Tight.
Yep.
Apple
looked good today, last I checked. Yep.
So if AI is going to be implemented, most hardware, phones, iPads, laptops are not AI capable. If we have a hardware refresh, I mean, there's, I think, 270 million iPhones that are not AI capable. What if they refresh all of those within the next 3 years? That's just phones. The stock is saying it's healthy. It doesn't validate Jim Roppel's thoughts, but if it comes out, it is giving me further indication. ANET. These are almost all 99 comp, TML, royalty. Look at how tight it's gotten. And if these are Cisco executives who said Cisco is the new DuPont, it's an old stale company. We're going to start a much more entrepreneurial, adaptive company. If you are implementing the GPUs, you put them in a cluster, 10,000 together. You have to link them together, connect them, and Arista is the go-to connection software, routers, the whole thing. And AI just almost doesn't work without them. Okay, so we have to look at the Mac Daddy as NVIDIA. And by the way, as bullish as I am, NVIDIA does not agree with me at this minute, okay? It's not out of this it's the loosest digestion it's had. Until this breaks out, I'm not really right. All right, it's tightening up. The average true range is getting tighter. I think you have 3 pivot points here. They did 30 million, I'm sorry, that's a B, 30 billion in sales last quarter. In 18 months, they're expected to do 70 billion in a quarter. Some estimates are even higher. Blackwell is a revolution, and it's a leapfrog. It uses less energy. It's much more efficient. It's just a whole, okay. AI doesn't work without NVIDIA. And I am very long NVIDIA, so my money is where my mouth is. But until it comes out, I'm wrong. Palantir, please.
Great month for Palantir.
And
great 2 months.
Dead tight.
Yeah.
Extended. This is really one of the only absolute pure plays of what 100% AI. The CEO, Alex Karp, is an absolute American patriot. He understands capitalism. He understands our enemies. And he's an absolute, in a most polite way, he's a rogue. He is totally good with going against the grain. He thinks out of the box. And his stock has changed its character. I felt it was uninvestable 6 months ago. It was too whippy. The average true range was too much. But with the last earnings report, the power is now, the market is showing me that it's tightening up a little bit. It's becoming a little more institutional grade. And we have to look at APP, please.
Yep. This one's haunting me.
So I have to promote. The Roppel Report had this as its best idea for like 6 weeks in a row. And when it came out, like China, it looks very much like China.
Yeah.
I thought it would break out, but I didn't know it was going to be so powerful. But the stock, when I bought my first block of stock, right where Allie drew the line, by the time I got my fill, it was up. So that is a tell to me that there's whales in this thing, way bigger than me. I immediately reload with another block of stock. And then I bought it like every hour all day because, people are like, how'd you get a big position? I'm like, well, the stock told me to do that by its performance.
Kept going up. Yeah.
So this is more, if you could go to the weekly, yes.
I was in it, and then, yeah, I got shaken out that down week, and I should have bought it back. I blame being in New York. Chris and I, we were in New York doing a bunch of internal meetings that day. Otherwise, I would have bought it.
Look at the skyscrapers of blue accumulation
Yeah.
volume. There are so many in there. I think it is the best volume signature in the whole market of semi to very liquid names. Okay, I'm sure there's some other little flea, but
and it's got the fundamentals to back it up.
99 comp, 98, 99 comp.
99.
I mean, you want to do yourself a favor, stay in stocks that have relative strength above 90, that are 99 comps. There's going to be better names, or I'm sorry, there's going to be names that are smaller and moving around, but that's where your disasters come from. Okay. You want to eliminate, if you buy Eric Kroll proved 40% of all of the best stocks have no earnings, but they're also the ones that are all over the place, and they have the most accidents.
Yeah.
So just let's eliminate the wild cards out of our lives and get with the quality. Okay,
Yeah.
just a couple more. VRT, please.
Yes.
So GPUs run hot, and if they don't have liquid cooling, they're inefficient. Basically, AI is, sand in the gears if they don't. Without VRT, without liquid cooling, AI has reduced its progress. It's a must-have. And this is more, again, this correction was extremely deep, but we had SMCI that had a blow off top. This had a big move. It was entitled to this digestion. And there's something wrong at SMCI. I don't know what the heck. Either VRT has a better product, or there's something cooking there. The stock is telegraph. Stocks tell stories. They tell you what to do. This was since the climax, it was uninvestable the whole way.
Yeah.
And it never really made a higher high the whole way. So VRT looks like they're going to prevail. And again, I am a long-term biotech bull, and there's single stock risk with the no earnings. They're research labs with no sales force. If they don't get a full FDA approval, there's nothing left. Take the single stock risk out with you at XBI. We have a semblance of a cup and handle, a pivot out of there. And this, to me, I've been salivating over this and waiting. I was in the biotech boom with Amgen 20, 30 years ago. And then for your Cowboys, LABU.
The leveraged version.
No, this is a trade. I find these way, way too hard to hold for a year or 2 years. SOXL, they're too volatile. I can't take the pullback. So if it comes out, I'll take a position and then I'll walk away.
Yeah. Just like a quick kind of scalp trade.
Yep. And guess what?
What?
I've used up all my words.
Right on time. There's a grandfather clock in the background. I think that means this is where we should leave it. Jim, as always, a pleasure. Thank you so much. And we will see everyone back here next month for our October monthly market report. Thanks, Jim.
Take care.